In this video, learn how to make a quality breakout trade in the hottest stock in the market, Tesla. Hi, I'm Mike Bellafiore, co-founder of S&B Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. In this video, two firm traders break down in step-by-step detail their profitable breakout trade in Tesla. Let's get to work on sharing these important trading lessons so you can grow your trading account.
So this was the stock split news breakout in Tesla. So big picture, the day before in the after hours, Tesla announced a 5-to-1 stock split, and that caused the stock to surge 8% immediately in after hours. This followed the lead of Apple, which surged 10% after announcing a 4-to-1 split with their earnings report 2 weeks prior.
Good, and that's a good job actually comparing it to how Apple did previously. In a strong market, you're going to see commonalities like this. Lots of stuff works in a really, really strong market. Analysis or just checks like what you just mentioned right there is going to work. So good job there.
Yeah, absolutely. And so this is going to mean that the Tesla share price would drop $300 to like $350 per share, and that makes it a lot more attractive and affordable to retail investors. Moreover, this morning, the pre-market volume was 4.5% of average daily volume, which is pretty high. Usually above 3% is kind of an indication that we're dealing with something that's going to be very in play. And then when Tesla opened up, our vol was immediately at 20, also very good. And then by 10 a.m., when we were looking to enter the trade, our vol was still holding at 2, which is also very good.
Hey, is there a certain RVOL that you guys like for these high beta names?
I think above 1.5 or 2 later in the day, and then open RVOL above 10 is very solid. Below that, it tends to be a little questionable. So big picture, SPY, of course, has been grinding back to yearly highs over the last 5 months, ever since bottoming out in March on the Fed Unlimited QE news. You can see that we are in a high time frame uptrend, holding above the 200 daily moving average, and then also holding above the yearly VWAP. The tech sector with NASDAQ has been in an extremely strong uptrend, holding well above the 200 daily and the yearly VWAP. And we also threw in that on this day specifically, we weren't really overbought necessarily on the daily. The daily RSI was only 55, and you can see that we're not really forming short-term tops until that RSI gets overbought above 70. And so we're looking to buy breakouts in tech stocks still. We're still leaning to the buy side with this tech rally.
So if RSI was above 70, different trade for you?
Yeah, I think that would mean we would be less willing to look for a breakout and more looking to short really overbought tech stocks.
Okay, good.
So Tesla on the 1 year was interesting to us because it had pulled back over 20% from its highs after releasing earnings. But again, very strong uptrend. This going back to October of 2019. This is one of the strongest stocks in the NASDAQ, a very, very solid candidate for buying breakouts. So on the monthly chart, this is a 30-minute chart going back 1 month. You can see that Tesla had pulled back 20% after reporting better than expected earnings. So we kind of got a sell the news effect over the last 20 trading days or so. And then on this morning, what was even more interesting was that we spiked up in the after hours and topped out pretty much exactly at earnings day low and the anchored VWAP from its earnings day. So this 1480 level that we were opening below was a very critical inflection level. We felt that if it were to get above this level, we could have a very significant breakout on our hands.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window. So don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So our game plan this morning going to the open, we saw that there was a very clear 1477 level in the pre-market. So we kept it very simple. We were thinking, okay, if Tesla gets above 1477 on volume on the open, we'll look for an opening drive to trigger this trade. Otherwise, if we can't get above 1477, then we wanted to see a pattern form on the open of at least 15 minutes, ideally like 30 minutes to an hour even, and then we would trade that breakout as a trigger for this trade. So here's the entry, Tesla on the open. You can see right at 928 we spiked on the imbalance, and that was the morning high. Right on the open we sold off quite substantially and ended up consolidating for about half an hour or so. And then right at about 10:05 we got that big ignition bar through the open price, and that was what triggered us to get into the trade. So here what we did was we entered a core position on our joint account with a bit of a wider stop, and this core position was a trade to hold.
So how does that work? So you guys do a joint account. How do you decide what to put into a joint account? Do you talk about it before the breakout? You talk about who's going to actually execute? How does that work?
Yeah, absolutely. So we game plan ahead of time if this is going to be a position that we would consider putting on the joint or not. And of course, something that qualifies to be on the joint is something that we'd be looking to potentially hold all day, because the 5-minute time frame or the 15-minute time frame is indicative of a potential intraday trend. So we chat about it, of course, before the open. We understand what stocks we potentially want to put on joint. Obviously we're on the headset all day, and when something sets up like that, we know that we need to be putting something that we can look away from, putting some risk on against that, understanding that there is a potential you might get a full ATR move, and so one of us will immediately have a trigger to put that risk on, and at that point we can both focus on our individual accounts and getting in and being nimble with the other side.
So it's got to be an A+ trade for you guys to put on a trade in a joint account.
Yeah, the joint account is really meant for the trades where we can risk quite a bit of our intraday stop on that account, because we feel as if that account needs something where you are using a wider stop, therefore reducing your RR, but having a high confidence setup. A high confidence setup where you can put on a lot of risk, but feel comfortable with that risk because you understand that you're going to be able to sit through that noise. Which is of course important to do, if you're looking to hold for a trend move, is to be able to sit through some noise and look away from that.
Okay, great.
In addition to entering that core position, we also put in momentum size with a tighter stop, only a 7-point stop. We used the 2-minute bar, breaking bar low for that stop. And our target also for that momentum size is only the measured move of that pattern. And if we see it stall before that, we'll even be quick to get out of that. The momentum size is not a trade to hold. It's just size where we can be a lot more heavy and size that we don't really want it to go against us very much. So that pattern target for the opening breakout, that measured move, ended up it ended up topping out there nearly perfectly for a short while. And so we ended up covering most of our momentum shares at 15:05.
Yeah, and you'll see that in a stock that is one of the strongest stocks in the market. You'll see that when the market overall is really, really strong. So you get the two of those combined with this situation, and you're going to see things make a lot of sense.
Absolutely. With the core exit, what we want to be doing is holding with the trend, but also taking some size off at different daily time frame resistance levels. And so before the trade, we had pre-planned some daily resistance levels, 1517, 1534, and 1564. And the game plan for the exit there is to take off a little bit in front of each daily level, and then when we see something that looks like a failure at that daily level or a high volume turn at a daily level, then we'll look to take off full size. So at 1517 we took off a little bit, at 1534 we took off a little bit, and then when we had that overextension above 1564 and then failure back below on volume, that's where we covered the full position.
How do you guys feel about piecing out of profits along the way. The thesis overall here is this is something that could finish high a day, maybe even gap up the next day. I take it. And yet you're piecing out.
Yeah, I mean, a big mistake with this trade, honestly, was taking off too much too early. I think we ended up taking 50% off at that first daily resistance. I mean, it's tough because you don't want to give back a lot of unrealized profit, and if you say, oh, I'll trail versus the last 5-minute pullback low, then you might see yourself get back over 50% of your gain. So I think taking a little bit off at each daily resistance, and then taking full off when you see a high volume turn is kind of the right mix, where you don't give back too much of the unrealized, and then you can stick around for most of the move. So here are our executions. You can see that we had a lot of executions on the breakout because we were entering in both our personal accounts and our joint account. We ended up taking a good amount of the personal shares off on that first pop, and then we took off the rest into that 1505, 1500 area, and then we were just scaling out into those daily resistances with the core position.
Well, look, I gotta ask a question here. So why do we do these playbook trades?
So that you can repeat best practices for when this happens again. I mean, we got...
Yes. What's going on literally, and I appreciate you guys actually doing this at this point in time, because what's going on right now as we're talking about this?
Tesla breakout.
Different prices, but you guys are in the middle of a breakout trade right now in Tesla, correct?
That's correct.
You're literally right in the middle of the breakout trade above 1900 now. It's up towards 2000. You're making a very, very similar trade today based on some similarities between what we're talking about here. Is that fair?
That's very fair. That's exactly right.
Yeah, and so that's why we do these playbook trades. And so I'm sure you're going to flip the slide and talk about what you can do better. And along the way, I'll give critical feedback as to where you guys could have done things better. And we talked about, hey, should you have taken off profits where you did? And that's an open question for you guys to decide. But really, the most important thing for the new guys listening and the developing guys listening is you are building your business. And the idea is for you to understand what your business is going to be and then have the infrastructure to do it better. To have the techniques, the learning techniques, to do it better next time. And so for you guys, after the close today, you need to be going back and asking yourself a very simple question. Did you trade the breakout trade and Tesla today better than what you presented here? And if you did, that's terrific. That's what this is all about. That is tremendous progress. And then the next time it has a breakout, same question, did you do it better than the next time? It's not realistic. I'm sure there's people that are sitting there saying, oh, if I just bought 1,000 shares when Tesla broke out above 1895 and 1900, I would be up XYZ. If I just would have done 1, 2, 3 ABC, I would have made so much more money than I ever had made. That's not the point. The point is to rise the bar, to move the bar up. To move the bar up a little bit each time so that you guys are making more money. And I will, of course, query you guys after the close to ask you, did you make enough money in this particular Tesla breakout today? And I know you're on the horn with Max talking through it. And I'm positive. I don't even need to ask this question before I get the answer. I'm sure you guys are going to sit there and say, I should have made more money. But really the question is, did you get better from this presentation that you guys just did? Did you get better with this breakout trade in a high beta name, the hottest stock in the marketplace? And if you did, you're getting better as a trader. Your playbook's really working, particularly in this marketplace. And the key is, well, how do I find more trades like this? And how can I push to that next level? So maybe you guys haven't had trying to think of the right number, but maybe you haven't had just in one trade a $20,000 trade to date. And I'm thinking as to whether or not you have, and maybe you have, and if I actually think you guys had a pretty big trade on that IPO this week. So whatever that number is, a good thing for you guys to be saying is, next time I see a trade like this, can I hit that next level, that next P&L number? Can I challenge myself to hit that next P&L number for an A+ trade like this, and then keep moving that number up? So, one, I appreciate you guys talking about this now. Two, I almost want to kind of apologize and hope we're not throwing you guys off, although you probably are just holding in as you should be, and maybe this is actually helping and that you're not taking off more than maybe you didn't want to. And the trade's still going on. But the last thing is, just keep getting better with these setups. And obviously this is a setup that works. Today is a perfect example.
Yeah, and I do want to add on that I think that the playbook here is no coincidence that we were working on this Tuesday night, Wednesday night, revising the playbook. It's no coincidence that Thursday we come in and we look at, nearly the same exact technical setup from a perspective of the 5-minute and take the same exact trade and make 2x what we made on this one. And we are still holding
That's
those.
awesome. That is awesome. That is absolutely terrific. That's why we do these exercises.
Yeah, so with regard to what we did well and what we didn't, I think we did a good job with separating our core from our momentum this time around. That's a new thing for us that we've been trying to do. That way we can be nimble on our personal accounts with our momentum shares without ruining that core position at that initial breakout price. With what we did poorly, we really did not risk enough with this setup. We only risked 15% of our joint daily stop and only 10% of our personal daily stops on this trade. This is way too little for this market. What we were trying to do in this market, with it being a lot more slow, is risk 30 to 50% of our daily stops on A+ setups. And this is because these A+ setups really are few and far between. And so by risking a lot more on fewer setups, it forces us to be extremely selective and allows us to really get paid when we're right. So that really encourages us to not overtrade and make a lot more on these trades.
All right, guys, appreciate it. Maybe we're going to have you come back and talk about the breakout trade today that you guys made in Tesla. But great to hear that you did even better than this one. And another good trade here. Appreciate it. Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.